Take a look at this map of the United States and locate your state. Then, observe the percentage associated with your state, which represents the proportion of the population aged 18 and above with a health savings account. Remarkably, Utah leads the way with 25% of its population having HSAs, suggesting they may have insights you're about to discover in this video. Consider the bill for $469 I recently received, covering 12 months worth of contacts. At first glance, you might view it as a reduction in your overall wealth since it's money out of your pocket. However, as someone currently holding an HSA, I see it as putting $3,577 back into my pocket. Allow me to elaborate. If you don't possess an HSA, you might be missing out on a substantial opportunity. Even if you have an HSA, you could still be missing out if you're not optimizing this account. As revealed in this video, a 2020 report discovered that only 6% of individuals with HSAs are implementing the strategies I'm about to share in this video, and that's a significant issue. Pay close attention. In this video, I will comprehensively explain everything you need to know about a health savings account, with the potential to transform it into a tax-free asset ranging from $362,000 to $731,000. This video is packed with valuable information, so be sure to watch it until the end to avoid any mistakes. If you have any questions I haven't addressed in this video, please leave them in the comment section below, and I'll do my best to answer as many as I can. An HSA is a savings account linked to a health insurance plan, allowing you to contribute pre-tax funds for medical expenses. Your initial reaction might be skepticism, thinking you can only use this money for medical purposes. However, I'll explain why this is perhaps one of the most beneficial financial accounts you can have. First, let's differentiate between an HSA and an FSA, as these terms are often confused. To contribute to an HSA, you must enroll in a high-deductible health plan, whether through your employer or independently. Later in the video, I'll guide you on choosing the right health plan. There are no income limits for HSAs, meaning anyone can contribute, irrespective of their income, as long as they have a high-deductible health plan. According to IRS guidelines starting in 2023, an individual with self-only coverage can contribute up to $3,850 to their HSA. For individuals with family coverage under a high-deductible health plan, the contribution limit is $7,750. If you're 55 or older, you can add an extra $1,000 per year to these limits. It's important to note that HSA contributions limits aren't all or nothing. If you can't afford the maximum, you can still contribute any amount within the specified limits. Additionally, some employers may contribute to your HSA a valuable benefit similar to bonuses, vacation time, sick leave, or a 401k match, which you should take advantage of if available. Before delving into HSA strategies, account opening procedures, and other tips, we need to explore how to maximize the potential of your health savings account. While many people view an HSA solely as a short-term health savings account, I encourage you to think of it as a health investment account, specifically designed for your retirement. This mindset shift is crucial, and I'll explain why. Your HSA should serve two purposes: as a health insurance policy where you retain 100% of the funds, and as means to pre-save for future medical expenses that everyone will face as they age. Consider it an account optimized for healthcare costs in retirement. Now, let's discuss the three options for managing your HSA funds: leaving the money untouched, using it for current medical expenses, or investing it without withdrawing for immediate medical needs. The last option allows your money to grow and compound over time. Paying out of pocket for current medical expenses rather than withdrawing from your HSA can be viewed as an investment in the growth of your HSA. For example, paying $300 for a medical bill today can result in significant growth, potentially reaching $2,100 in 30 years. By taking advantage of the investment potential of your HSA, you can maximize your savings, especially when comparing to individuals who treat their HSAs differently. Let's compare two people with HSAs who handle their accounts differently. Both max out their annual contributions for 30 years, but one keeps the money invested while the other lets it sit idle. The difference in their HSA balances after 30 years is substantial. To be fair, we must consider whether the individual who lets the money sit idle would invest any extra cash they have. However, even if they do, the HSA offers unique triple tax savings that other accounts cannot match. The HSA provides triple tax savings, pre-tax contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. This makes it a powerful retirement savings tool. Opening an HSA is straightforward. You must be enrolled in a high-deductible health plan (HDHP) to contribute to one. If your employer offers an HSA with your health plan, they typically select a provider for you. Otherwise, if you obtain health insurance independently, you need to choose an HSA provider and may need to contribute on your own. HSA contributions to an employer-provided health plan are typically deducted pre-tax from your paycheck and sent to the chosen HSA provider. If your employer doesn't have a designated provider, you may need to set up automatic contributions from your bank account. While many HSA providers exist, consider avoiding those that charge ongoing fees. It's important to select a provider that aligns with your financial goals and minimizes fees. You can transfer your HSA from one provider to another even if you change employers. However, it's essential to manage your contributions if you're self-funding your HSA. Investing your HSA funds is a wise choice if you won't need the money for immediate medical expenses and are comfortable with a longer investment horizon. Low-cost index funds and 3-fund portfolios are recommended investment options. To maximize your HSA's value further, consider using a rewards credit card to pay for medical expenses and then paying off the balance shortly. This allows you to take advantage of cashback rewards. Keep in mind that withdrawing HSA funds for non-medical expenses before age 65 incurs income tax and a 20% penalty. After age 65, you can withdraw funds for non-medical expenses without the penalty, but still pay income tax. Now that we've covered the fundamentals of HSAs and how they can potentially become a powerful financial tool, let's delve a bit deeper into some of the finer points and strategies that can help you make the most out of your health savings account. As mentioned earlier, HSAs are a fantastic way to save for future medical expenses, and the tax advantages they offer make them even more appealing. However, it's important to realize that not all HSAs are created equal. When you're choosing an HSA provider, consider factors like account maintenance fees, investment options, and ease of use. Some HSA providers charge monthly or annual fees for account maintenance. While these fees may seem insignificant on their own, they can add up over time and eat into your potential gains. Therefore, it's wise to offer an HSA provider that offers fee-free accounts or one with low, transparent fees. Another critical aspect to consider is the investment options available within your HSA. While some HSAs offer a range of investment choices, others may limit you to savings accounts with minimal interest. If you're looking to maximize your HSA's growth, it's essential to choose a provider that allows you to invest in assets like stocks, bonds, and mutual funds. Additionally, assess the ease of use and convenience offered by your chosen HSA provider. Do they offer a user-friendly website or mobile app that makes it easy to manage your account, view transactions, and track your investments? These factors can significantly impact your overall experience and ability to effectively manage your HSA. One often overlooked strategy for maximizing your HSA is to keep meticulous records of your medical expenses. This means saving receipts, invoices, and any documentation related to your healthcare spending. By maintaining a detailed record, you can ensure that you're only withdrawing funds for qualified medical expenses when needed. Moreover, a well-organized record of your medical expenses can serve as a valuable resource during tax season. You can easily calculate your deductible medical expenses for tax deductions and avoid any confusion with the IRS. When you're using your HSA for medical expenses, consider using a dedicated rewards credit card that offers cashback or other incentives. By paying for your qualified medical expenses with such a card and then promptly paying off the balance, you can effectively earn extra cash while managing your healthcare costs. As you continue to contribute to your HSA, keep in mind that your contributions can accumulate over time, potentially growing into a significant nest egg for healthcare expenses in retirement. It's crucial to stay disciplined and prioritize your HSA contributions alongside other retirement accounts like a 401k or IRA. Remember, your HSA can be an excellent supplement to your overall retirement strategy due to its unique triple tax advantage, tax-deductible contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. In summary, your health savings account has the potential to become a valuable financial asset that can help you cover healthcare costs efficiently and even enhance your retirement savings. By carefully selecting an HSA provider, investing wisely, maintaining organized records, and maximizing its tax advantages, you can make the most of your HSA and secure your financial well-being for the future. Before we wrap up, I'd like to encourage you to take the time to explore your health savings account further and make informed decisions about how to make the most of this valuable financial tool. Remember that the choices you make with your HSA can significantly impact your financial future. If you found this video helpful and informative, please don't forget to show your support by hitting the thumbs up button, leaving a comment with any questions or thoughts you may have, and subscribing to the channel for more valuable insights on personal finance, investing, and financial planning. Thank you for tuning in, and I look forward to sharing more financial wisdom with you in our upcoming videos. Until next time, take care, and remember to make the most of your financial journey.